Hey there. Today I'm going to go way outside my wheelhouse and try to explain a thing or two about stock markets. Specifically, I'm going to talk about the Trump bump, the incredible rise in the U.S. stock markets that happened between the election of Donald Trump in November 2016 and January of 2018. You won't learn this reading the New York Times or the Washington Post, but there's a growing sense in some sectors of the United States that, you know what, Trump must be doing an okay job because, hey, people are getting rich. I disagree with this story pretty strongly. Let me explain why. Now, the economy and the stock market are two different things, but they are connected. They feed back into each other in ways that I could make a very long video failing to explain. It's all tremendously complicated. What we do know is that for the past 100 years or so, the U.S. stock market and the U.S. economy have been very good investments. The right strategy is to find solid companies, buy their stocks, and never sell them, no matter what the market does. There are tons of people at banks and hedge funds and on news channels who are paid a lot of money to pretend they know a better strategy than that. They do not, as I covered last time. In the long term, the U.S. stock market reflects the health of the U.S. economy, more or less. But outside of crisis time periods, that's not what matters in the short term. The most important facet for the performance of financial markets, hour to hour, day to day, and even year to year, is confidence. When people believe that a given investment or market will go up, it goes up. And then prices go down when that confidence disappears. If a whole bunch of people believe and act on something that isn't true, economic reality will eventually intrude, but it can take a long, long time. That's what happened in 2008. Despite endless evidence saying it wasn't true, everybody was super confident that house prices would go up forever. Then, one day they didn't. What matters here is who makes the decision. For house prices in the 2000s, it really kind of was everybody, or at least a large slice of the U.S. population that believes something that wasn't true. For the U.S. stock market, it's a much, much smaller group. Back before the financial crisis in 2008, it was estimated that around 62% of U.S. citizens were invested in the stock market to some degree. In 2017, it was estimated that that figure had fallen to 54%, which is a shame because the ride since 2009 has been one of the most lucrative in history. The economy has grown slowly and steadily, and the markets have gone steadily up, with only small plateaus here and there. Between Trump's election in 2016 and January of 2018, however, the markets kicked into overdrive. Trump's administration will tell you that this is because he somehow magically changed everything, but that's not it. It's about confidence. And it's about the confidence of a much smaller group than 54% of the American people. That 54% mostly has very small slices of the stock market through pensions or in their retirement accounts. As with income, wealth is super unequal in the United States. As of 2017, the top 10% had 75% of the wealth, and a significant proportion of that wealth is in the stock market. So what do we know about this 10%? Well, with the exception of Oprah, some athletes and entertainers, and some of the younger slices of Silicon Valley, they generally didn't like Barack Obama. Was race a part of this? Absolutely. The majority of the people that make the decisions that actually matter in the U.S. stock market are still old white men, and there was definitely a racial element in their lack of confidence in Barack Obama. But there is more to it than that. Despite the fact that Obama was the most fiscally conservative president of the 21st century, he talked like an old-school Jimmy Carter-style Democrat. He wasn't quite as enthusiastically bought out by Wall Street as the Clintons were, and that scared a lot of rich people. Obama was the only non-business filleting president we've had since the 1970s. To make matters worse, old white man media kept screaming about what a socialist Obama was. So, old white men put their money and confidence into crap like gold rather than investing it in the stock market. Now, most rich people don't like Donald Trump, but they do like Republicans. So when Trump was elected, they decided that the happy days were here again, and they jumped back into the markets in a very big way. Almost nothing about the fundamentals had changed, but the fact that there was an old white Republican businessman in office was enough for the old white Republican businessmen that make most of the decisions about our stock market. And this confidence is now actually feeding back and changing the U.S. economy. This isn't fair and it isn't rational. But the U.S. economy has never been either of those things, and it never will be. Markets are dumb. But there's another level to this that may be even more important. Those old white men who own the stock market are guided by an even smaller class of people. They are the stockbrokers, analysts, and business media types that live in New York and have made themselves rich pretending to know what the economy is going to do. They come from everywhere, but a lot of them come from places like Staten Island, Long Island, and Queens. They grew up in the shadow of the big show in Manhattan, and they've scrapped and strived to be part of that show for their entire lives. If they're not from New York, they work to become part of that forget about it Wall Street culture. These people don't just identify with Donald Trump, they are Donald Trump. So of course their confidence in the markets is surging. The Trump bump in stock markets doesn't have much to do with what Trump has actually done. It has to do with who Donald Trump is perceived to be. The Trump bump actually ended around a month after Trump finally signed his tax cuts into law. I'm going to go ahead and disagree with Warren Buffett here and say that I think the effects of the Trump tax cut have already been priced into the market. These cuts are amazing for companies and their balance sheets, but I just don't think the markets have much higher to go. I think economic reality is beginning to intrude. For almost 5 months now, the Dow and the S&P 500, two common measures of the U.S. stock market, have been failing to reach January's highs. Reality is intruding, and I suspect that the Trump bump is over. It could be 5 to 10 years before the next big crash, but I doubt we'll be seeing any more large gains. These indicators could easily remain stagnant for a decade, or they could crash next week. But what the hell do I know? I shot this video like 2 weeks ago, and this prediction could already be wrong. If you've been paying attention in this series, you know that nobody really knows anything about what's going to happen with the markets. Markets are dumb. Tune in next time for an even more egregious example of confidence warping markets, Recep Tayyip Erdogan and the Turkish economy. Thanks for watching. Please subscribe. And if you'd like to help me keep making videos like this one, you can click on the Patreon link here to find out more about my crowdfunding thing, or you can click on the PayPal link in the description to just send a donation. I'm grateful for any help to keep doing this. Thanks.